I crossed Africa when I was 3 years old in an RV. So I always had this connection to nature and kept it, even with a small parenthesis around software engineering. I started Eventbrite in 2005. I was the CTO. I built a lot of the initial product and then I scaled it in Europe all the way to the IPO in 2018. I started thinking about the fund in 2017 when I joined Index as a venture partner. I didn't really have the network, but I had the credentials of someone who had built €1 billion+ company. Specialization as a fund comes as a big advantage, I would say, compared to all the others who did climate for a while and have moved on to defense or other fields that are more hot. There's 3,000 to 4,000 startups that I've raised in climate tech in Europe over the last 5 years, and many of them are very valuable and very promising companies that need to have financing, and hopefully they can get it in Europe.
This podcast series at the Hack Summit is sponsored by 8, a design agency run by Gabri Grassi, helping impact-driven tech companies reach more people, attract investment, and scale further. Get your free ready-to-scale brand checklist at the link in the description, together with a playlist of all other Hack Summit resources. If you want to elevate your brand, reach out to Gabri Grassi at the link in the description. Renaud, welcome to the show. I'm excited to have you. As I was telling you earlier, it's a bit of a closing the loop moment for me because I was listening to a podcast from Mathieu Stéphanie 2 years ago, thinking about what I wanted to do with my life, and you were talking about Slate. And now here we are. You're coming to my podcast, which is fantastic. So thank you for being here. Today I want to explore a bit of your past because you've been a great entrepreneur. I've been doing the entire story all the way to, I think, the New York Stock Exchange. Is that correct?
Correct, yes.
So yeah, including New York Stock Exchange, which is not the case for a lot of people, to be honest. You're one of the lucky few. And then I want to talk about, what it means to build a fund versus being an angel investor. I think there's a lot of differences there. Want to talk about your thesis because you're investing in growth stage, early growth. Let's see how you define it. But before all of that, Renaud, can you please quickly introduce yourself?
Of course. Thanks for having me on the show, Hugo. I followed all your podcasts since you launched, so congratulations to bringing the right information to the community. I think it's very valuable effort. So my background is always been connected to nature, so I'm full circle as well in terms of Slate and what we do. I grew up looking through the lens of my father, who was a wildlife photographer. I crossed Africa when I was 3 years old in an RV, so I always had this connection to nature and kept it, even with a small parenthesis around software engineering and the web. But started my career as an environmental engineer. I did that for 4 years. I was in San Francisco. I ended up there a little bit by accident, but saw that the internet had a big promise to bring information into the hands of everyone. It was very compelling, so I left my environmental engineering career to learn how to code myself, learn the web. Built a career there and started Eventbrite in 2005, at the end of 2005, with the idea of another big mission for us. How do we democratize events and make getting together a lot easier than it was in the past?
I don't know if the Hack Summit is on Eventbrite. We should talk to them.
Not anymore. I think we had our peak and maybe we're not in our peak anymore.
Okay.
But we built a great brand over 15 years. When I was involved, I was the CTO. I built a lot of the initial product and then I scaled it in Europe all the way to the IPO in 2018. A great journey, learned a lot, understood what it takes to build a reputable brand that is trusted by your customers and attendees worldwide. It's a great pleasure when I go in a room and I ask who's been a user of Eventbrite. Everybody raises their hands.
I've been a user, so
very pleased with the journey and learned a lot. I was just a coder at the time, and I learned how to build teams, how to structure things, how to do international expansion, how to build the right product for the right audience, and started angel investing in about 12 years ago now. Just because I wanted to keep track of all these other fields where a lot of innovation was happening. And I thought yeah, why don't I put small tickets into a bunch of different companies? These founders are well connected to their field. They understand where the future is heading. Let's see what I can do. And I hopefully can help them, but they also can teach me a lot. So I did about 80 angel investments.
80.
X0, yeah.
Wow.
Over the years, a few more later on, I would say. And then before I decided to start a fund, I started thinking about the fund in 2017 when I joined Index as a venture partner. I did that on the side of still being full-time at Eventbrite. So not an easy double hat, but very interesting to see how a firm runs internally, to see if I could start a venture fund at some point. I thought there's space for new models, and if I started a fund, what would it look like? So then I did a year at Index. I did 5 years at Point9 as a venture partner. Saw what it takes to build a top tier fund, and then we decided with Clément, Chloé, and Sébastien to start Slate, which brings me full circle to my initial childhood memories of nature and how do we reconcile the world we live in with the needs of the planet for the future.
Yeah, you have to send me some pictures from your father. I'd love to see them. And you're also very lucky because one of my big dreams in life is to actually go in Africa and, ride and see the animals. So
spent a lot of time in Africa. It's a great place.
Yeah, I love, maybe one day, hopefully we can get there once the podcast is successful enough. Okay, well, going back to a bit of the Eventbrite story, what do we learn from that experience? I mean, obviously, it's really hard. It's a very long journey. It took you 12 years, something like that. So, it's a lot of learnings probably. But what are the key takeaways from that experience?
There's so many, but so many ups and downs, decisions to make. I think maybe two big lessons is the importance of brand. I think that's one thing we really thought about deeply and try to position ourselves in a way and present in every interaction we have, both with investors, but with our clients, with their clients, because we're a B2B2C platform. That in this day and age, brand is what defines you in a way, and you have to spend a lot of time crafting it because it doesn't come naturally. A startup is very small, doesn't have has a name, doesn't necessarily have a brand and all that's attached to it. In our field, which Eventbrite is really a fintech company in a way. We collect money, we distribute it to event organizers, we take a cut in the process. But trust is so important in finance, and that's something we realized very early. So when we launched our payment processing, for example, we had a big team doing fraud because we know that if we get exposed and lose all these ticket sales, we would take a big hit in terms of brand reputation. So that's something that was core to our thesis, and we did that, I think, very well. Now we're a recognized brand, we stand for some things, and that's what separates a lot of startups from being successful scale-ups.
Also, because I guess in the age of AI, I think Eventbrite as a platform, you tell me if I'm wrong, but it feels like it would be easy to kind of reproduce the technical details of the platform as opposed to kind of the brand.
We got that from day one. We had Russian copycats that copied everything. So, and that's where the brand stands out. Like, you can copy the code and build something very similar very quickly. But how do you build reputation and trust over many, many years? That's much harder to disrupt. That's why investing in the brand early, I think, is very important. And thinking about it and reflecting the values you want to project in every interaction you have with your clients, with your investors. It's something you build over time. It doesn't get replicated by AI in 2 weeks. That doesn't work.
I love that you're saying that also as a CTO, right? Because it's like, okay, you could have said, well, the code is everything. You need to have the best features, best product, whatever. But actually, you're like, well, the core value was the brand. I love that.
Yeah, and sometimes it's not the best product that wins, but the best brand usually will win. And then how important people are to the overall equation. It's very true at the beginning with the founders, but every piece you add of talent along the way plays a big role into your eventual success or not success. And it never stops. Like, even after the IPO, you have a different set of rules, new requirements, new type of profiles you need to add to be taken seriously and to accompany this growth over the long run. So a lot of admiration for companies that have managed to do it day in and day out, the Googles, the ones that we talk about, Magnificent Seven or whatever. It takes so much effort to build that corporate culture and keep going after the initial phase of the startup development.
What are some of the things that you have implemented at Eventbrite in terms of like culture, hiring, looking at bringing the right people into the company?
I mean, that's part of the people function. Like, you need to have a good interview process, for example. It's something people don't spend enough time crafting to not only be able to filter the best candidates, but to give them a desire to work at your company. Especially now with the new generations, there's a lot of alignment that you need to provide in terms of mission, values, the way they work, and match that with your requirements for the job, of course. But it's a whole process that you need to engineer. And I think the best companies have that nailed down and are really able to extract the best talent who's the most motivated for your particular project. And that's a big investment that you need to do, iterate over, I think, to find your right model.
Love it. Okay, I mean, so obviously great success for Eventbrite. People can look at the entire story. I think you have had many interviews. There's been a few articles written about Eventbrite if they want to learn more. It's not really the topic for today. So you leave Eventbrite, and like any other retired entrepreneur, you start to invest. I feel like that's a typical story. Where do we start? I mean, you want to angel invest. Do you have the network already? Do you have access to deals? What does that look like?
I mean, I started investing when I was still at Eventbrite, and I didn't really have the network, but I had the credentials of someone who had built €1 billion+ company. So I leveraged that. I spent a lot of time evangelizing Eventbrite in Europe, built my network there with accelerators, incubators, VCs. And there were not many CTOs investing at that time. There are a few more now. There are more operators being part of the angel networks, but at the time it was very limited, I would say. So I had something different to offer. I had product vision. I had how do you structure teams and the more practical questions a lot of founders have, especially on the tech side. So it wasn't hard to get into rounds. I just have to get exposed and decide to say yes. But I don't think deal flow was my necessarily the problem. And I took advantage of it, made a lot of investments, learned different fields this way. I always try to invest in things I understand, so I stayed away from health and things that are more bio related. Crypto I stayed away from most part, but otherwise focused on my interests, and that's how I ended up in climate. I always love science and nature, and I think climate reconciles that with in the industrial world. So I got excited about all the different creative ways people were thinking of transforming our industry to be less extractive in general and less reliant on fossil fuels. There was all these creative borrowing of things that are happening in different industries and bring them together to figure out how to make, textile from CO2 or other things that seemed impossible. But it was like a science renaissance in a way. And deep tech, I think, is the continuation of that. Climate tech started, 6-7 years ago now, and became more mature over time, figuring out what models work, what is acceptable for industry, how do we sell into it. So that's being part of that community for the early foundational years was very important to decide what we want to do with Slate. And that's what defined our thesis in the end and for the fund.
Where do you think you have burn your fingers in angel investors? What are some of the lessons learned from those 80 investments? Because I'm sure you've made mistakes.
I think forgetting that cash is very important and that expecting the next round to be automatic is a big mistake. So I've had a couple of unicorns disappear because they went bankrupt as a result of not being able to pay their bills. which was quite surprising, very quick to happen, and very disappointing for everyone.
Also a good reminder that until you have sold, you haven't made the returns.
Exactly. So that cash is always king, I would say, and figuring out how you have enough through proper revenue, but also being careful about managing the money you fundraise, and not expecting the next check to be automatic, because things change quite quickly. I've seen many cycles of exuberance in how fast you can close to drought of no one investing, like in the the financial crisis in 2008, 2009. We see that coming back regularly. So I would say let's be cautious and careful at the same time as being very ambitious in terms of growth and all that. So it's a hard equation to reconcile, but something founders, I would say, should keep top of mind.
Just maybe to fast forward, and then we'll go back to your story, but where do we stand today in that market? How do you see it? Is it a very, very active market that's investing a lot of money? Is it something that where we see people being more careful? What's your analysis?
I think we're in a big transformational wave with AI. It touches everything, the way we work, the way we produce, consume. So it's the same type of wave as when the internet started taking off. It's transformational. It will have deep impact in society. So there's exuberance there for sure. Everybody wants to get in, and there's commercial impact also, which probably was missing from the dot-com wave that resulted in dot-com crash. So I don't think we're going to have the same type of crash, because companies like Anthropic or OpenAI have actual very big revenues, and a lot of companies are matching that.
They're also burning a lot. So
the true economic price point is still to be determined, I think, because there's a lot of VC money funding all the training and all that. So let's see where it ends up. But the massive impact on the economy cannot be denied. It will only grow, I think. So for sure, there's exuberance there, which means there's less in other fields, and maybe climate tech is one, where we've had a lot of hype in the last few years, and now we're going back to industrial reality of pricing and delivery and incorporation into physical products, which doesn't make it less exciting. On the contrary, I would say for us, with much more focus, specialization as a fund comes as a big advantage, I would say, compared to all the others who did climate for a while and have moved on to defense or other fields that are more hot. We're in it for the long run. I think the climate transition has just barely started. The energy transition is well underway, but there's so many other fields: chemistry, industrial energy consumption, nature. How do we leverage nature more efficiently and at bigger scale? I think there's a lot of very interesting investment opportunities, and the lesser interest there is from VC, the better for our fund, at least.
Yeah, of course. No, I agree with you. And I think, the tourists have left. That's what I'd say. Okay, well, let's go back to your story. We'll get into Slate in a minute. But so you said cash is king is one of your learnings as an angel. Is there any other learnings from that period of time?
I mean, equity story is always something we mention, but very important, I would say, how you craft your...
Can you explain it? What is a good equity story?
It's one where you can explain every time why you raised, how much you raised, and how you didn't make it so difficult by raising too much too early or with the wrong investors. Or we see cap tables where there's the founders have 20%, it's Series A. Like, that's not a good equity story. It doesn't make us want to invest. Like, we need enough of the capital of the company to be in the hands of the founders or the exec team. We need the right people around the table. Governance starts the minute you incorporate the company. So think about it very creatively. When you go to IPO, you need to have a board with 8 or 10 people who are not your investors. So this takes time to build and find the right people who can help you at each step of the way. And I think money can make you do stupid things. I'll say broadly, yes, you do need a lot of cash to build a fast-growing company, but you can also make a lot of mistakes by hiring too fast, being have too many layers of management, picking the right size for your industrial demo, or there's so many of these small decisions that need to be made that are eventually very big decisions, and making them with the wrong assumptions in terms of the capital story you're going to sell to investors, and different types of investors are needed in climate tech. You don't just have the VCs, you have the project financiers, you have the debt facilitators, you have people who guarantee your projects. Depending on your business model, there's a lot of different actors that you will need to convince to figure out how you exit successfully. And that is not something a lot of investors talk about. What is your exit story in a way? And if you had to project 5, 7, 10 years from now, who would you want to be acquired by? Or is it only the IPO is the path for you because it's novel and no one else will take the risk, or no one else will have your ambition and buy you for 10 billion? So there, I think there's a lot of discussion that need to be had fairly early on, because your trajectory is different depending on what exit path you will decide to follow eventually.
What does early on means? Because as you know, I'm investing in pre-seed seed startups. I'm sometimes a bit cautious when I see them saying already where they want to exit and when, because I'm like, hey guys, you have a business to build already, and then maybe you'll think about the exits. What's the right approach to it? Because I feel like it's such a taboo in the industry. Like no one wants to talk about the exit, but it's super important.
I mean, in our fund, we focus on Series A, B, C, and definitely
that's the right time.
Between A and B, I would say is the right time, depending on your business model, to think about what is the landscape? How am I going to be evaluated if I'm going through an M&A process? Is it multiples of growth or revenue or EBITDA? Or what is the industry benchmarking at for our size, or hopefully in 5 years we're that size? Like, how much would we be worth on the market? So this type of process that you only go through usually when you commission a bank or someone to help you with an M&A process or a fundraising process. That is very important, because you need to build those partnerships fairly early on. If you want to be commercially successful, you need to find the right types of clients with the right types of ACVs or contract value for the business. So a lot of things derive from what type of exit you're going to be looking for, and to build a business towards that, rather than let's build a business and see what happens, which is a lot of this, what we see in the market. Like, many other investors don't really spend much time, or they do it just internally. It's not a discussion with the founders, which we want to have, like, just to understand their motivation. Are they building the IP so they can sell the IP for a few tens of millions, or do they want to build a huge company that changes the world and is worth 2 trillion like SpaceX or others?
I feel like you have a preference there.
No, I think we're very practical also in understanding that we're a fund that needs to return money to investors, that has a certain lifespan. And I mean, we're entering venture in Europe, which is not an easy field, asset class to sell to, because we haven't had that many exits, and we need a lot more. And I think climate tech has the potential to create real valuable physical IP that has true value and can be very efficient at creating overall great returns for investors. But you need exits to do so. And you need some trade sales as well as IPOs, I think, to find the right balance of exit profiles and timelines.
Yeah, I think the next 5 years are going to be quite interesting for climate tech.
Yeah, and pre-seed seed is not the right time. Right? You need to, of course, understand where you're going into, what are the economics. The economics are more important, I would say, in figuring out if the technology works, but does it work at the right price, unit pricing?
Yeah.
And it's very hard to do, because you don't know exactly what size of fermentation tank you need or things like that. But at the very least, try to figure out, what are the boundaries and how you get to something that's economically viable in the industrial sense.
Yeah. And to be honest, just to go back to that point, but we're always talking internally about what is the possible exit strategy, just to make sure that there is someone that's going to buy it, or maybe an IPO, but IPO we are very careful with. Okay, so to go back to your story, you're an angel investor, and then while you're at Eventbrite, you join Index, one of the leading funds, as a venture partner, and then Point 9, is it? Point 9 Capital. why do you want it to be part of a VC fund? What was the excitement that came for you for those firms? Also, they're not investing in climate particularly.
No, but 2017 climate wasn't a big topic yet. Even climate change, I think, wasn't as big a topic. It was in conversations, but it didn't become what it became since COVID, I would say. So for me, it was just training, like understanding how you become a better investor. I was already angel investing, but I knew that if I wanted to have a better contribution, a bigger contribution to the companies I was helping, I needed more capital. I needed more insights that were shareable with these startups to help them grow. So understanding how funds make their decisions, what is the process, what type of analysis you do, how do you build conviction? I think investing is a lot about building conviction in the future of the industry, future of this particular business.
How do you build conviction, Renaud? Because I'm learning.
It's a process, I would say. And I've seen Index, for example, they talk about the deal quite frequently for a while until they build their own conviction. And the partners and the team that helps with analysis is all part of this deal team that needs to eliminate all the objections, I would say, more than believe. I mean, of course, you have to believe the team is great and that they have huge ambition, because the venture model only works for that. But then after that, it's how do you eliminate the objections that could hinder growth or make it a risky bet. And you build conviction over time. That's why as a growth fund, I think we have an advantage of being able to have a little bit of freedom in which stage we invest. And we do want to know the companies very early to see how they execute. Do they deliver on their seed plans or Series A plans? Do they actually are able to overcome all the obstacles that come in deep tech in particular? Are they able to convince great employees, great investors? All this is part of building conviction and reinforcing that the few signals we saw early on are actually materializing into something that has a big business impact eventually. And that's harder to predict. But working at these funds, I learned a lot on what it takes to build culture inside the fund. How do you get access to the better opportunities? How do you price these? There's no real true price that comes out of the sky. Like, it is only a supply and demand problem. So you have to evaluate the potential of these businesses and put a price on your coming in. So all that was very informed by what I learned on the process, the diligence that is done, the trade-offs between the risk and the rewards, and then how do you win deals? Because it's a competitive market out there. There's thousands of funds. Like, how do you position yourself to be the one check that they want, the founders?
Is that even something that you had to learn? Because if I'm thinking about Index, for example, they have such a great brand. They probably win all of the deals they want to get.
Not true, because there's still competition with the big US funds, for example. Or, I mean, they have a US team, so they did well. But at the beginning in the US, it was very hard for them. They had to beg and borrow, I would say, to find the little tickets that got them onto the roadmap of the US market, onto at least the top tier fund. And that takes quite a while, actually, for them. And but yes, I would say once you're established, then a lot of deal flow comes your way. It's still very competitive, because the best founders will make sure that happens, because it's in their interest when it's competitive. So it's not enough, I would say. And you have to keep figuring out what the next wave is, which is a big part of being a successful VC, is understanding where to deploy now, which will be impactful in 10 years for the most part. Yeah, that's not easy.
Timing is everything in VC. Yeah. But it's very difficult to get the right timing. I think the Index particularly got it right with Revolut.
They made a few good bets.
Do you have a few deals from that era, from Index and Part9, that you brought in as a venture partner? Because what's really the model of a venture partner? Is it just contributing to deal flow, or were you a bit more involved?
Highly depends on the fund and what they're looking for. With both of them, it was more my operational experience they wanted. So I got involved with specific companies, either on the board or as an advisor. We discussed deal flow when it was relevant for my particular knowledge. I brought a few deals. Some did happen, others did not. So I learned also in that process. But yeah, most importantly, it's how you build a firm.
Yeah.
More than a fund, and ensure that day in, day out, these funds deliver. That is the craft, I would say, of venture.
And I think today's Slate is a fund, not a firm yet. What's your perspective?
No, I think we build it as a firm. Like, we understand, and I aspire for some legacy for what I'm doing and what we're doing collectively with my co-founders. So we came together because we have a firm belief the climate transition is hugely important for society, and that there's very great, interesting projects that will change the game in many different industries that we can back and help grow maybe differently than other growth funds do, by being very involved, being a lead, co-lead, being very active investor with ourselves, our knowledge, our collective knowledge as a team, but also the extended team that only specialization can afford, let you build, because it takes time to build these relationships. We have C-levels of large corporates, for example, that are either LPs or advisors to the fund that have very deep knowledge in fields that are critical for climate change in general. And that will take 10 to 15 to 20 years to build if you were starting a fund that's more generalist. And we think there we have an edge. We understand better the different value chains we're trying to sell these startups into. And in this evolving landscape of venture, I think the specialists in certain fields will be the winners, I think, because they'll be able to pick the right horses to back and help them grow much faster than any other VC could.
Yeah, it's interesting because I kind of see two waves right now. One of them is a specialist VC, and one of them is a mega big, large funds in the US that are in the billions and billions of dollars that are able to do a bit of everything. So it's interesting to see how that's splitting out a little bit more than before. Look, I want to understand the transition from being an angel and venture partner to building a firm. Look, I mean, you have the track record as you have the track record as an entrepreneur, you have the track record as an angel investor, you have the track record as a venture partner, you built a great team around yourself for Slate. Like, how hard was it to raise a fund? Because, like, I mean, I couldn't think about a better team or more well-positioned team to do this job, basically, right? So, but still, it feels like it took.
It feels like a lot of time trying to build the perfect team,
right? I mean, I believe you did a good job, but I think it still took a long time for you to raise the fund. So I would love to understand, how that transition goes from being a great angel and a great founder to being a great partner of a firm or builder of a general manager of a firm.
I mean, it's a very entrepreneurial journey. So building a firm is not exactly the same as building a startup, because you need to do all your fundraising at the pre-seed level, basically. But yes, assembling a great team, figuring out what the opportunity is the beginning blocks, I would say. And then you need to sell that to the world, and the world of LPs. You're selling the field you're in, you're selling your credentials, and around something that's long-term, like we build a firm for the next 20 years. So you try to find, again, good answers to all the objections you can have against investing. And LPs it's a different ball game raising from LPs. It's a long-term game. It's not transactional like fundraising for a startup. You build relationships, and every LP has different objectives for their investment. Pure financial impact, mix. Some of them do direct investment, want to do co-investment. So the landscape is quite varied, of very different organizations having different ideas of what a fund should be for them. So we spent a lot of time trying to map the ecosystem. We went after institutional investors because we decided collectively we needed a certain amount of capital to be relevant in growth. So 250 million, we started with that. Let's see what the market says. Then we went to the bigger climate buckets, which are sovereign funds. They have big plans around climate. They know how important it is for Europe, for France, with EIF and BPI France. We spent the first year fundraising with them, finalizing all the documentation, getting traction from individuals as well in parallel, so we could do a first close, which was very important to start investing and showing the rest of the LPs who maybe are more on the sidelines for first-time funds or wait for a portfolio to have emerged and be started to form to make their final opinion. So that's why we did pretty well, I think, there. And yes, we started with our credentials, track records, specialty. We think operator-led funds are very important in this day and age. That we could do a growth fund that has a different mindset also and is more helpful and less financial, maybe. I mean, we look at the financials, of course, and it's very important for us to see a clear path to commercial revenue. But we also understand that the founders or the exec team are very critical to this long-term success of the business. And then you package all that, and then you find your first anchors, and then you invest, and that's the stage we're at now. We're looking for our third investment. We made 2 already, ready to deploy, looking for businesses with commercial revenue, which is still fairly hard to find, I would say, in climate, but there are a lot of great potential candidates that we're talking to on a daily basis now, which is very exciting.
Yeah, there's actually someone that comes to mind that I need to introduce you to later after this conversation.
Please do.
What's the right team? Because you haven't, I mean, I've looked at the team, but I'd love for you to describe quickly who are your co-founders for the fund, because I think you've been very picky, I guess is the word, in terms of like what the team should look like and the experiences from all of them. So what makes a great GP team?
I think what we wanted is a variety of lenses in how we evaluate deals and connections to industry. So the first person and I say we, because Clément and I started co-investing together as angels, and we started doing that in 2019. So we had some history together already. He's also an entrepreneur, started a company called PeopleDoc that he sold in the US. So we had very similar profiles coming from software, very much interested in the climate space, having deployed already, having met a lot of the community in climate, deciding that this is what we wanted to spend our time on. And then what does it mean for 2 software guys to actually invest in climate, where there's a lot of physical assets and industrial connections to be had. So we met Sébastien, who was at McKinsey and was thinking about his next step as well. Started working together quite quickly, figuring out what a fund could look like in growth, how we would do things differently, what is industrial network, because he's been in climate since 2004, first wave of the renewable transition. So a lot of experience in circularity, waste management, resources, water. He was the global lead for water at McKinsey, for example. Very complementary to ours, work for private equity infrastructure funds on the M&A side, so a very deep understanding of what the landscape for exits could be for industrial startups, and a strong desire to come in earlier and help founders of startups instead of big corporates figure out how to build their businesses. So we quickly decided to partner, and then we also wanted someone with very strong financial background. And I had been on the board with Chloe at a startup I invested in 10 years before, and I heard that she wanted to join a climate fund, so that's how we got together. And we've been working together for 3 years full-time now, so we know each other very well. The first-time team risk is gone for LPs who are listening. We definitely know what we're doing and what we're looking for, and we're excited to have new people join the team as well in January. So we have 2 more associates who joined.
Again, because you already hired 2 recently.
No, they're the same 2.
Okay. They're not official.
Paul and Celia, who come from industry and big financial companies like BlackRock.
You mentioned something interesting, which is obviously Eventbrite was a software story. If we look at the deals that you've invested in so far, at least Fairmat is not quite software.
There's a lot of software in Fairmat. It's really robotics and AI that allows the recycling of the carbon fiber into a different material. So they cut it up into small pieces and then reassemble them on specific patterns for specific use cases.
Okay, so you got me there, but it's still quite different from a platform to book events. That's what I want to say.
Sure.
How do you adapt to this new world that you're learning, which is hardware with a long sales cycle, long adoption, like real physical asset, probably a lot of capex? Like, how do you adapt to that?
I mean, I started my career in construction sites where we're building large-scale remediation projects for environmental sites. So I have a deep connection to the physical world and what it takes to actually be building in the physical world. So and 3 of us out of 4 are engineers. So we have, as Sebastian started his career in a L'Oreal factory in Indonesia. So we have strong industrial connections, I think, all of us. There, I think, having worked at other VCs really helped, having been exposed to different types of models, both in software and deep tech in general. And then trying to understand what the industry looks like, how does it make decisions? And that's where Sebastian's background is very helpful, and the contacts we have in different types of industries that have tried a lot of innovation over the years. Like, we can't say corporates are just sitting there waiting for disruption. They are trying to do disruption themselves, and some of them are very good at it. So there, I think we gather the right experts for analyzing a specific company, a bit like you're doing in seed, pre-seed, where you more look at, does the technology work? Does it have potential? We look more at, is it commercially viable? Who's going to buy? What pricing? What will make it so compelling that it's a win-win for all? Which I think are the best models eventually, when everybody has something to gain from adopting these new products. So it is different from software, but because it has real physical limitations, I think, in how fast you can deploy and the type of infrastructure you need to build to get there. But when I started in software, we had to buy 1 million plus storage devices to store photos. I was at a photo sharing website early on in my career, and it was not like today where you just push a button and Amazon does all the work. There we had to buy machines, we had to wire them, we had to go to physical server racks where we had all our software. So it was very physical heavy, I would say, even at that time. So we take that on, and we learn every day, which is the best part about the job of a VC.
Yeah, and also one thing that's quite fantastic, I think, about building a growth fund is that because you'll have a small portfolio, like of 15, 20 companies, you also get to spend a lot of time really looking at them in the market, right?
And also at the growth stage, it's things that are common to all companies. How do you structure, who you hire, which market you expand into, where do you build your next facility, who you partner with, who you fundraise from, how do you manage your budget, governance, reporting, compliance, all these things that are common to all companies. So there, I think we have a lot of experience to share on when to do things, how to make these millions of decisions you need to make on a 10-year basis to be successful. And it's less relevant whether you've built a factory before or not. Like, that's not our job. We don't build factories. We find the right people to be sizing the thing right and at the right stage of the equity story and putting the financing together so that it's possible to actually grow that solution at scale, which is really the ambition we had for Slate, which was to accelerate the time to impact of these very promising but still unproven and undelivered value until they in the real world working and creating their product.
Why did you decide to focus on growth stage?
I think because it's the best fit for our team. Like, we all love the scale-up phase, and it's not the case for all venture investors. Love them like the 0 to 1 phase, and I enjoy that. But I think there are a lot bigger problems to solve from 1 to 100. in terms of pricing, delivering on value, customer support, go-to-markets, expansions. The problems are infinite, and we all love thinking about these problems and figuring out the right path, because at the end of the day, it's how do you make the best decisions? And we thought there's space for a fund that has a different mindset, not just purely financial, or the next first step is to replace the CEO. I think that doesn't make sense for a lot of companies where the founders have all the knowledge, all the excitement, all the inspiration and the vision that is needed to be successful. They just need the right support. And I think as a fund, we can be very differentiated there in our approach to how we create value with these founders, how we help them grow into the role. Managing a 20-person company is not the same as managing a 2,000-person company, and you need a lot of learnings along the way that we hopefully can share with a different structure, different team, different mindset.
Don't you feel lonely at times? Because I feel like there are not that many growth funds in Europe for climate. I feel like that's a very big gap, actually.
Yeah, and that's what attracted us also to the opportunity. I think there's more than, depends how you count, but 3,000 to 4,000 startups that have raised in climate tech in Europe over the last 5 years. And many of them are very valuable and very promising companies that need to have financing. And hopefully they can get it in Europe, where we have enough capital, I think, and enough focus on climate as overall an economy to have a few funds like ours to finance that part. And that's why we thought there was the conjecture of many different numbers that made it very relevant for a fund like Slate to exist. So that's why we launched the project.
What was the reaction from LPs? Because when I talk to LPs, all of them are aligned on Europe doesn't have enough Series B kind of capital. Did you also feel that in the traction you had in the conversation you had with the LPs?
We feel it more with entrepreneurs who have a lot of choice at early stage, because there's quite a few funds now that cover that space as specialists. But it's much harder after that. And a lot of them have to go to CVCs or sovereign funds. And there's many other pockets that are interested in the climate space. But there was a few venture specialists. And I think there's a big opportunity for venture specialists in many different fields. And climate is one, just because it's so complicated to sell a new product to industry in general. And we think we can be game-changing for a few of these businesses and be Europe-focused, both on our LP-based, and we have a lot of great LPs on the cap table already, and hopefully we'll get more before we close the fund and for the next funds. Let's think about sovereignty on a financial level as well. I think that's one of our ambitions.
Love that. Well, look, before we finish this episode, I'd love for you to help me understand what is a company that's a fit for your fund. So when we talk about growth stage in climate, what's kind of the minimum requirements that you need to have?
We acknowledge there's a lot of different business models in climate, from pure software to process industries that will require hundreds of millions to get off the ground. I think we're looking for 4 major traits: a strong value proposition for the industry they're trying to penetrate. I think that's a requirement today. You need to be 10x better, or some have very compelling reason to change a production line. Unit economics are no longer to be ignored or sideswept for sustainability. Like, we need competitive, and industry in general is not struggling, but it's hard to build large industry in Europe in particular. So definitely unit economics that are compelling at scale. A good equity story, I would say, is a requirement. And thinking about the next rounds more than the previous rounds. How do you finance this company all the way to exit is something we spend a lot of time thinking about. There's more project financing available. There are different actors investing in climate tech now. Banks, for example, regional banks deploying capital for certain types of projects that have certain ROIs built in. And there we look at the modularity of the businesses, of the solutions, the financiability of each part of or each deployment, how structured it is as a financial product, and how attractive it is for the financial players, including infrastructure funds that are looking to diversify from renewables. And then finally, the exit path, which I think at our stage is very important. At least have a vague idea of what is required of this company to be attractive, starting on paper, but eventually with a big check from someone, or an IPO if it's compatible with an IPO process. So these are the 4 things we look at. Commercial revenue really helps, I think, validating that there's interest and it's not just offtake agreements, that is real, and that if they can produce, it will be consumed, because that defines price and the commitments and the growth trajectory of the business, which is the most important in the end for a growth fund. We want to put fuel on the fire, but the fire has to be there.
Yeah, the fire has to be there. I love that comparison. Fantastic. Well, Renaud, how can we help you for Slate? What are some of the things that people that are listening can do if they want to help Slate succeed?
I mean, great deal flow is always important. Like, we want to talk to the most ambitious founders and the ones that have a bigger chance of have a short time to impact, like win a time race for climate change in general, and let's deploy what's deployable as fast as possible. Let's not waste time in the process with the wrong decisions. We always need more capital. So LP introductions, of course, are very important to us. We know it's a world that refers each other a lot, and it's very human there. So we definitely are continuing our fundraising efforts. And then, figuring out how to collectively work to make Europe a better place to both innovate, but also to grow companies effectively. I think there's a renewed interest for industrials in general all over the globe. Some of the big names in Europe, I've seen 1 year performance on their stock level being very high and comparable to some of the big tech firms in the US. So let's use this money to fund the exits of the future and keep innovation inside Europe, which I think would be a good aspiration to have for a VC fund.
Well, the future looks bright. Fantastic. Well, Renaud, so people, if they want to reach out to you, do we leave your email address? Do we leave your LinkedIn? What's the best way?
Always reachable. We're always interested in talking to anyone in the community. My email is renaud@slate.vc, so don't hesitate.
Easy to find. And one last question, who's the next person that should be in your seat?
It's a good question, because you've already had a lot of people on the seat.
Could it also be a founder, by the way?
I mean, if you haven't talked to the founder of Fermat, I think you should talk to him. He's been thinking about climate for a long time and building in it for even longer. So I think Ben is a very interesting person that will probably teach a few things to other founders in how you position your company well and how you build into like replacement solutions in complex industrial setups.
Sounds good. I'll reach out. Well, listeners, if you like this episode and if you like the show, don't forget to like, comment, and subscribe if you're on YouTube, or to give us a follow and a 5-star review on Apple Podcasts and Spotify. Renaud, thank you so much.
My pleasure.